Hello friends, my name is Dr. Bharath Chandra. The videos are meant for the benefit of society. As all of you know, we conduct a question and answer session every week and large number of people ask questions. Many of them will be answered. Many of them are left unanswered due to lack of time. Today, we have made some videos in Kannada. The exact videos we have made in English so that everybody will benefit. One thing to note, the question you asked probably is not answered in this particular episode, but watching the whole video and listening to the questions and the answers given to them, you will learn a lot about stock market. Today, the very interesting question that was asked was ethanol mixed petrol. Will the profitability of Reliance stocks come down? This particular question will be answered somewhere in the middle. To start the video, the first question that was in front of us was short-term trading. Can I make 5% profit per week? And if that is the case, how much should I invest? My dear friends, 5% per week means approximately 20% per month, means 240% per annum. I don't know whether Rakesh Junjunwala or even Warren Buffett got this much of profits. Probably what you're talking is intraday trading or futures and options, which is extremely risky. We never ever recommend such risky instruments in our workshop nor in our YouTube videos because 95% of the people lose money, and the one who indulges in these kinds of short-term trades are the experts in stock market, and they are full-timers in stock market, plus they have tremendous risk appetite, plus they are very rich people. They don't mind losing a small amount of money experimenting with these kinds of short-term trades. Our sincere suggestion, please don't indulge in these short-term trades. Our suggestion, go long-term and 5, 10, 15, 20, 25 years, and in compounding, probably you can get the money that you never thought of in your life. And that could be the right way to deal with the stock market. The next question in front of us is, Sir, I have been watching all your YouTube videos. I have started investing. My age is 34. I have somewhere around 2.5 lakhs invested in Provident Fund. I am getting 8% out of it, and then when I calculated 26 more years, it comes to 18 lakhs. And can I take the money back from PF and put it in stock market? Because in stock market I may be getting 15 to 20% and I will invest in 8 to 10 good shares. I am very happy. Each one of the sentences you wrote is perfectly right. We are so happy that you have got the right kind of message from our YouTube videos. Now, certain observations. As you correctly said, in Provident Fund, you get 8%, no doubt about it, and that is a fixed money. However, investing in Provident Fund approximately 10% plus matching 10% from the employer is a good idea. You cannot avoid it. It is almost compulsory. Plus, they don't allow you to take that money for any unreasonable demand made from you. They may ask you to continue as annuity. My suggestion is, apart from PF, you may invest 5, 10, 15,000 separately in stock markets. As you said, 8 to 10 good stocks, and for the next 26 years, and you will get a huge amount of money for your retirement. The next question is from an investor who has joined our January 22 batch. Sir, my age is 33 years. I invested in SBI life insurance. I have invested 2 lakhs in the ULIP and 4 years I have already paid, but the term is 20 years. Shall I continue the policy? SBI Life Equity Fund, SBI Life Balance Fund, SBI Life Debt Fund. In these, the money is invested. Shall I continue? Is this mutual fund or stock market? Kindly inform. Again, a very good question. Probably many of you may be having the same doubt. What you are invested is ULIP. That means Unit Linked Insurance Plan. If you look at the stock market, there are three things. Number one, mutual fund. Second one, insurance. The combination of that is called ULIP. This is not a horse, this is not a donkey, and this is a mule because it's a combination of them. In insurance, when you invest money, you get approximately 5.5 to 6%. When you invest in equity mutual fund, you get approximately 12 to 14%. But in ULIP, you may get anywhere from 8 to 10%. As you rightly said, you already invested for 4 years and the term is 20 years. My suggestion, talk to the consultant who advised you this particular scheme and tell him that you will be able to invest only for 5 years and after that no more investment, and whatever money that you can get after 20 years, please take it, and whatever money you are investing in ULIP, you can transfer it to stock market for creating a sizable SEP. One data I don't have is how much money you have been paying for this ULIP every year. However, I have given you all the details. The next question is also very interesting. What about IRCTC future? This is exactly what we have been telling in all our videos, in all our question answer sessions, that the questions of this kind cannot be answered in such an open forum. Suppose I say IRCTC stock is a good stock. Question is how long? Because every 3 months once there is a profit and loss account, balance sheet, and based on that you can invest or continue to invest or hold or sell. No doubt IRCTC right now is looking very good, being a monopoly share in the particular sector, but if government introduces private players into the field, then IRCTC shares will surely suffer. So our suggestion is kindly don't ask such questions in the future. Better is how to select a stock. It is as good as asking a education minister which school my child should join, and then he cannot tell anything. He can only tell you the characters of a very good school, like the school Maidan should be big, the teachers should be good, teacher-student ratio should be good, the principal should be experienced, etc. What we are doing in our channel is to tell you how to select a share, not to suggest a share. Large number of people keep asking us how to earn money from stock market on a monthly basis. In order to give an idea, we have organized a free webinar on our 3 months online stock market course, which is happening in Canada on 24th July Sunday from 10:30 a.m. to 1 p.m. and this is an online webinar, and to get the link you have to send an email to us, successdigest@gmail.com, name, mobile number, and in the subject column kindly type Kannada webinar. Once you get the link and you patiently sit through the whole webinar and then you decide joining the workshop offers me a lot of benefits, then my suggestion, you may decide to join the workshop. But whoever have joined our workshop have got only one story to tell us, that I should have joined your workshop at least 10 to 15 years earlier because the power of compounding would have worked to my advantage. So suppose you have heard about this webinar today and then you neglect it and then you join after 15 years, you will also repent surely for not joining now. Our suggestion, please come on Sunday, take the decision to join the workshop. The next question is from a young man of 27 years. Sir, I am 27, earning 70,000, spends almost 50,000 because I am only earning for 5 people in my family, 10,000 in SIP, 4 funds for my son's education, marriage, 15,000 in SCP, 8 shares for my lifestyle for long term. After 50 years, I decided to take self-retirement, also taken 1 crore term insurance, seeing your video. Please guide me if any changes in investing. First, let me congratulate you. For your age, you have been doing very well. You have taken the term insurance too, unlike rest of the people who have been taking endowment and money back policies. And then you are already investing 10,000 in SIPs plus 15,000 in SCP. You are in the right direction. Our only suggestion, please take the workshop, learn more about the fundamental analysis, technical analysis, and then only start investing your 25,000 rupees a month. And then you said you want to retire at 50. I don't know whether you will be able to retire at 50 unless and until you look after the stocks in the right manner. 60, yes, easily you can retire. Again, let me congratulate you because you have understood everything about what I have been speaking. Here is the question of the day. Sir, my name is Vinay. Reliance company's maximum profit is from petroleum. So can Reliance be a big hit in the next 5 years? By Nitin Gadkari's statement, can we invest long term? Probably what Vinay is indicating is Nitin Gadkari said every year we are going to start increasing the percentage of ethanol in the petrol so that in the days to come the petrol consumption will become less. Also, probably he may be talking about the alternate fuel like electricity and solar in the coming days. Whatever it is, let us understand one thing. Mukesh Ambani is probably 10 times or 100 times more intelligent than us, running such a big empire. They must have understood the situation long back. First of all, petrol is a must, though ethanol is mixed. Second, to get solar and electricity is a long-term project. Third one, there are many countries closer to India but not as advanced as we are, like Pakistan, Bangladesh, Sri Lanka, and many other countries which may require petrol for the next 10, 20, 30 years. Plus, you should understand that Reliance Ambani is so intelligent, petrol, no doubt, is a big winner for him, but he is already diversifying into Reliance Retail and Reliance Telecom in terms of Geo, and in the days to come, even if the petrol, the consumption and the profit from that comes down, there should be no hassles getting money from some other areas and some other new areas too. The next question is a very popular question in our sessions, and that is, after face value becomes 1, is it possible to split further? Unfortunately, once the face value is 1, you cannot make it 50 paisa, 25 paisa, but you can give bonus. For example, Titan right now the face value is 1. Cost of the share is approximately 2300 range, and in the days to come, in case they feel the share rate is very high and unattractive for people to buy, they can give 1:1 bonus and instantly the title will become exactly half 1150, and that is a solution. Many people have a misconception that they should avoid the stocks with a face value of 1 because there is no scope for growth in the future. It's a misconception. We should get rid of it. And question is the profitability of the share, not the face value. December 2021 batch graduate has asked this question. July 29, the Tata Steel has split 28. If I buy the share, will I get the split? Very good question. Many of you may be having the same doubt. Here the question is not the split date. The question is about the record date. Maybe about 10-15 days earlier they have announced the record date. If they say this is the record date, that is the day you must have the shares to be able to get the benefit of the split. So kindly understand this, not on the split day but on the record date you must have the shares. Here is the last question but very important for short term, how to select the good shares. Very difficult to answer. The question is you must know about the technical analysis, probably 30 days moving average or 15 days moving average, whatever you feel is right for you. You must buy and sell based on the red line technique, and we call that technique as red line to red line technique. Of course, I have no idea with what intention you asked this question. Maybe if you buy the shares with high beta, you will get more profits, though it's a double-edged sword. When you are making profits, you will make more profits, but when the market is going down, buying high beta shares, you lose definitely more than what you invested in the other shares. Friends, this is all in this edition of the video. If you are not the member of Stock Market Academy channel, this is the time to subscribe, press the bell icon, send this video to all your friends, and video is good, press the like button. The content of the video is good, please type good in the comment section. Thank you for watching. Bye bye. All the best.